Right, so from the top, this is a tutorial slash webinar around how to use the cash flow planning tool to help basically plan how cash is going to move through your business throughout the year. And at the moment, we're seeing some tough times out there, so we thought it is probably a very, very good starting point for people that maybe have never done it before. And Phil, you are the master of planning cash flow. A lot of people say cash is king, but I think cash flowing through a business is just as important, right? We need to understand how that works.
Yeah, absolutely. And we're big fans of keeping it simple. So developed a spreadsheet that is available for anyone to download, and we use across a number of clients. And you can customize it to your own situation. So it could be monthly, so it's for the whole year, or you could do it for weekly or fortnightly. It just really depends on what your cash flow cycle or working capital cycle is in your business. And you know, you don't need to be an accountant, and you certainly don't need to have an accountant to be able to prepare this. And the comment that you made before, cash is king, and certainly this will give you insight to where potential issues could arise in the future based on decisions that you're making today. And you know, we know that accounting software like Xero is all as at today. You know, your bank balance that was at their close of business, well, yesterday actually, and you process it, but beyond that, it can't give you any insights as to what the future is going to look like. So we need to be looking at a spreadsheet or some other kind of software to do that. And we, you know, like I was saying, keep it simple, do a spreadsheet, and we've created this model. So if we scroll over, you still got my screen?
I can see you. I haven't got your screen at this stage, but I'm excited because I know it's going to be...
I need to share my screen, so I will share that. Can you see that?
I can. Wow.
There you go. Here is our cash flow forecast model, and it is set up as a weekly model, hence the name weekly. But if you want to do it monthly, you can change that. It's all editable. We don't, you know, lock anything, so do it as you want. Week commencing, so this is starting from next Monday, and then simply the cash that you expect to receive in that week, and the cash that you expect to go out in that week, the total net movement for that week, what you start with, then what you expect to end with. And we've opened up at the same time the demo company of Xero, and hopefully this still loads and I'm logged in, just to help show people, if you're using Xero, where to get some of the information from. And if you're wanting to start off with the easiest bit, and that is the opening bank balance, you would scroll down here and go, well, if we're doing it from the 11th, our opening bank balance is $11,659. So we would put in here $11,659. Enter. Boom. That's our first thing. In fact, I did actually miss a little bit of a step, and that is our little help sheet with a few pointers in it. But the most important one here is number 2. If you've got an overdraft, and let's say this business has got an overdraft of $50,000, we just enter that in there as a positive number. You don't have to enter it as a negative number. And then that pulls through to our graph here that we create to go, well, our overdraft limit is way down here. Our cash position at the moment's up here. So we've actually got $60,000 of cash available in our business over the next 12 weeks. So if we come to populating the data, we've entered the opening balance and we go, right, what cash do we expect to receive? So if we come back to Xero and we look at our reports, and then we go your accounts receivable summary report, because this is a report that shows you who owes you what money. And we do it as at today, and we can see that this business is owed $9,172. And it's due, you know, there's a guy here that's 2 months overdue, 1 month overdue. Most of it's current, and, well, sorry, 1 month overdue, and then the balance is current. So if we look at this, and, you know, that's where you'd plug the numbers from. But if we go here and go, well, okay, if we're on 20th of the month following terms, we're $6,000 that's due. So we'd put that in there. And then by the end of the month, we'd hope to collect some of our overdues. So let's whack in $3,000 there. And we do a few cash sales, and we might do, you know, $500 a week, say.
Those all get recorded through the books, those cash sales, don't they?
Absolutely, mate. We don't do anything dodgy.
Good, man.
So 500, and look, we can go copy, paste, just to put that through. That's kind of disappeared behind that thing there, but we can come back to that. And then we can go, right, rolling forward to the next period. We're in May, so looking at June, and we go, right, 20th of the month following terms. The next period there is the 22nd of June. So between this week and this week, we should expect to collect some more cash. And we might go, well, by the end of the month, we'll collect some more overdues, and that might be $2,000. And then in this month, we've had a ripper month, so we expect to collect $10,000. So we'll drop that in there, and we'll move along a little bit more to the rest of our 12 weeks. Things are looking up, so we'll put in $600 of sales because we've spent a bit on marketing. So we'll whack that in there. We've got that, and then we come to July the 20th, and you know we'll put in another $10,000 there, and you know, look, we'll whack in another $3,000 there. The other thing to note, that this spreadsheet here, opening bank balance, this is for the main trading account. So if you've got more than one bank account and you move cash between them, we've got the ability here to go transfers in, and there was a section here, transfers out, but you could always just type that in there, right? Transfers out. Otherwise, if you use two bank accounts together to run your business, add the balances together and then don't worry about the transfers. So that simply tracks your cash, and just using your accounts receivable report and the timing of when you expect the cash come in to then populate this part of your report. And then we can see here on the graph that, well, we're not spending any money, so the cash graph is going up, and by the end of July we'd be on $50,000 by the looks of things.
Beautiful.
We come back here and we go, right, well, we've actually got wages to pay. They're paid weekly. You know, that would be $500. You know, that's covering our cash sales, for example. Let's do it this way. Control C. Is that working? Same thing, but we'll go across here. So that's done that. And then we've got salaries monthly, and they'll be paid 20th of the following month as well, because you know, your monthly salaries, you like to string those out because they're normally a little bit bigger. So your top dog, he'll probably be paid, you know, let's say $2,000 a month. And we scroll across, we come to the next period, $2,000. We come along to July, wherever that is. Yep. And then we come down and go, well, PAYE, that's your next big one. That's always 20th of the month, and you've got to do that on time. You don't want to be late with that bad boy. Otherwise, interest and penalties from IRD, and that'll end up costing you more than the core tax itself. So PAYE, that might be $750. These are all completely irrational numbers from a fictional business, and bear no resemblance to anything. But it will at least help people see how to populate the numbers in a reasonably simplistic manner. For GST, that's every 2 months. So, you know, whether you're on an invoice or a payments basis, you're going to be registered on a 2 monthly basis. You might even be registered on a monthly or 6 monthly basis. But if it's 2 monthly, then you're going to have GST payable, well, it would have been April, May. You'd have some in May, and then in June, 28th of June, I think it is. And you might have a couple of $1,000s there to pay. April, May, June, July. So we miss the next GST period. So we don't need to worry about that other one. And then, you know, we've got creditors. We pay them on the 20th of every month as well. We might actually string those out. They might be $5,000 that month. come here, we'll go to the last month. We've got $7,000 of creditors there because we're buying more stuff because our sales are a bit higher now. And then we might find that, you know, in this last week, we're up to $10,000. You know, then, you know, you've got a fancy car, I think, Luke, and that's on lease payments. So we want to drop those in at $500, and that's on the 15th. So you get the idea. Whoops, 500. And you can look at your graph and you go, woof, there we go. We can start to see some movement. So by the time you add in the rest of your data in here, you'll be able to track your bank balance. And then the beauty about this is going, well, if you wanted to give your staff a pay rise, what would that look like? And you could add in here, all of this is customizable, and you could go, well, okay, I'll give them a pay rise and it's going to cost me an extra $200 a week. And we'll start it from June in arrears, weekly, $500. So you just drop that in there, 500. It is quite manual, but I can assure you that once it's set up the first time and this information's in there and you are consistent with it, either week to week or month to month, and updating it, it becomes quite a valuable tool. Then you can see there that $500, you can see, well, my beginning cash and my ending cash is actually a little bit lower. So yeah, it's doable. Obviously your PAYE is going to go up, so you might have to change that figure from $750. It might go up to $1,000 now, and you can play around with it. But it at least gives you some flexibility and able to do some scenario planning. So if something was to happen and your business needed to close, or you know, there was some kind of out of the blue event and you needed to defer payment. So, you know, we don't want to pay our creditors this month, but we'll take that out and we'll do $10,000 that month, and then we'll do $15,000 that month. What does that do to cash flow? And you can track it and see. So you're giving yourself more headroom in this period and taking the hit later. So it's all playing. What we suggest then to clients is once that you can track your actuals in there as you go. And then once this week or the month is finished, what I'd normally do is copy all this information. So select it all, copy, if you're using Excel, drop that in there, then come to that last week and just nil it out. And then importantly, change the date. So we roll forward. So we're now on the 18th, and then we can look at it and go, okay, we've only got this last week's of data to do for the 3rd of August. What have we got on the 3rd of August to worry about? Any cash coming in? Yep. $600 of sales we think are going to come in. There will be no debtor receipts that we're expecting. And then what are our regular payments that we're expecting to come in, or sorry, to make on the 3rd of August? Obviously, the one thing I didn't do was highlight all of those expenses and roll those across. Come down across there and zero those out. And then you start again for your next week or your next month, and you're good to go. So that is some very simplistic cash flow forecasting for a non-accountant and a business that just wants to get visibility of going, how much cash have I got available?
Beautiful. And I think this just highlights how simple it actually is. And that's, like you say, once you start, then you get your data in, then you can start to update it as the weeks and months go by, right? Rather than trying to, you know, it's not doing the whole thing at once each time. It's just updating it, isn't it? So it's quite simple.
Yeah, absolutely. And I would say if you haven't done something like this before, set aside maybe an hour to an hour and a half to set up your template. You're going to need to have, you know, either your bank statements or your accounting system at hand, be it Xero or MYOB or whatever it is that you use, and go through your bank statements and have a look at those regular payments that you make. Have a look at your historic GST payments and your historic PAYE payments to get an understanding of what the average is. You know, if you are a weekly salary and wage payer, then there's going to be some periods where you've got a 5-week pay month. So your PAYE for the following month is going to be higher. And you need if you're a slightly bigger business and you're dealing with bigger numbers, you need a plan for that, because you might say that your PAYE for a normal month is, say, $50,000, but in a 5-week month, that might actually bump up to $60,000. So it's an extra $10,000 you need a plan for. So it's just thinking about things like that. But yeah, I'd imagine it would be about an hour and a half to set this up from scratch for a business owner / non-accountant to do this. And then if you consistently do it week after week, if you're going to set it up as a weekly model, or if in fact you're going to set it up as a monthly model and do it every single month, you'd only need to spend 20 minutes to half an hour each time in terms of updating it. But the other thing I think that's important to note is measure what you expected to come out versus what was actually came out, and have a look at any differences and understand why. So if you didn't collect as much cash as you expected to, why? Was it because you weren't on the phone hustling your debtors and getting them to pay, or they said that they would pay and they didn't? On the cash going out, was there any oversight in terms of cash going out, or you missed an automatic payment, or you paid for something and didn't think about the cash flow plan and the impact on it, knowing that there's another bill coming out in months to come. Just little things like that. And it only takes a few times to do this over and over again for it actually to become reasonably slick and quite a simple process, but the insights from it are incredibly valuable.
Yeah, I think one thing that we've seen is that business owners, their only visibility of their cash flow is actually just their bank balance. So they don't have any understanding of what their cash flow is going to be through their business. So if you can implement this, rest of our clients to do, it immediately puts you in an upper bracket of actually being a business owner and actually practicing some of the proper things that you should be doing. So we try and drum it into people that this is paramount to be staying on top of and actually making part of your process throughout the week or the month, just like going to the gym is to staying healthy. This is very important to understand if you're going to run out of cash or not.
Yeah, absolutely. And it's all well and good having $11,659 in your bank account today, but really the value is in understanding what that bank balance is going to be in this case 12 weeks time, and it's $6,500 based on this model. And looking at that, I'd be scratching my head and going, gee, what's going on in my business to halve my cash on hand? Am I forking out too much? Perhaps these wage increases aren't doable, or I'm not collecting all of my debtors, or we're doing cash sales, but we're not actually collecting all the cash that, or banking rather, all the cash that we expect to do. So it might highlight some process or risk issues in your business around maybe cash is going sideways when you expect it to be banked, because staff might have their fingers in the till. Who knows? But it certainly paints a picture and provides some insight to do some planning around, well, if I want to go out and buy a new piece of equipment, for example, and it might be a piece of machinery or a new motor vehicle or something like that, and I want to finance that, and I've got a quote on the finance, and I know it's going to cost me X per fortnight or per month, I can put that in here and go, new loan payments. This is all customizable. Whack in the date there, you think it's going to come out on the 20th, and then you can map it out and see what is the impact and go, well, can I do it? As with every model, it's in Excel. If you don't think 12 weeks or 12 periods is long enough, extend it out further. There's space there for Africa, but certainly the clients that we use this for find it invaluable for understanding what the future looks like, to be able to make decisions today that will make sure they've got enough cash on hand in future periods to be able to pay wages, pay their overheads, and keep a real tight lid on debtor receipts to make sure that everybody's paying on time. So quite a valuable tool.
I think that example you give of purchasing an asset is probably practically the most common reason that we see a cash flow needing to be done for a business that doesn't already have one. So the bank, the first thing they'll ask for is, is the deposit on this asset going to affect the cash flow of your business? And the business owner goes, no, we got plenty of cash in the bank. And they go, cool, I don't believe you. I want to see proof. I want to see how that deposit payment is going to affect your business and your cash flow. And then I want to see how the loan repayments do as well. And then all of a sudden they're like, oh, okay, how do I do a cash flow? So if you can get in the habit of understanding this and doing this before you even get to the bank, you're going to have another layer of sophistication when you have that discussion with the banker. Oh, actually, yeah, here you go. Take a look at my cash flow forecast. They might say, hey, this needs to be reviewed by an accountant or not. But at least you're another step down the path and you're speeding things up.
Yeah, absolutely. Another thing that just sprung to mind as I was looking at the model is, let's not forget income tax payments. So if you're a provisional taxpayer, you'd be able to drop your 3 installments in here. So as soon as that August date drops in, which would be, it's just outside of this period here. But if you wanted to start and plan for it and go, gee, I got $5,000 of provisional tax pay in August, what's that going to do to my cash balance? Then all of a sudden, we're down, and you can see that there. And if in fact your overdraft was only $1,000, because this is a small business, this graph all of a sudden paints a very different picture, and you can see that you've only got a little bit of headroom in there in terms of available cash come August. So really, you need to be fixing something in here. Yeah, admittedly, we're missing some debtor receipts and whatnot, but things to think about around scenario planning. The other thing I mentioned is, it's weekly. If you want to change it to monthly, that's just pulling that date and then it's plus 7 days. You just need to change that to be plus 30 or 31 or whatever you need the formula to be, and then copy that across. For you Excel whizzes out there might be a better way. I'm not entirely sure what it is, but that's the way we've set it up. But you can easily change that to be monthly by tweaking that formula up there.
Keep it simple. Yeah, I really like what you say as well about tracking that balance, because one of the ways that I use this is I go and look for gaps. So if cash is looking tight, then I know, okay, what are my options? What levers can I pull to be able to change that final cash balance? Do I need to defer that tax payment using a tax pooling mechanism? Do I need to get some revenue pumped back into that month? Do I need to get on the phone and preempt trying to get some sales in before that date? Do I need to go to approach the bank faster? All those sorts of things. So you're basically doing this to then make decisions off of the back of what the data is telling you, right?
Yeah, absolutely. And the opportunities and the scenarios in this are ultimately limitless. And on a scenario where you wanted to go, well, I want to increase my revenue. To increase my revenue, you probably need to invest in some kind of advertising and marketing strategy. So you could have advertising in here and go, well, I'm going to plan on spending an extra, whatever it is, $500, $1,000, say, a month on a marketing campaign. And that's going to have an impact on revenue, but that won't have an impact on revenue until probably, this week here. And we would expect to see, on top of the sales that we're getting, an extra $400 a week. So you're going to be, incurring a loss. And then come the second week, that might grow up to $600 in sales for 2 weeks. And then all of a sudden, because things are going well, you've got an extra $1,000 a week in sales. So, you've had to make an investment in something to get some growth. But what does that do to your cash balance? Yes, we can see that we've got more headroom. So it must be working on that assumption.
Well, I think you need to add in some accounting fees, because I reckon the people are going to, want to come and join you, mate, with this masterclass you've just put on.
Well, I hope so. And if anyone does have any questions, for those that are tuning in live, please feel free to drop some questions in and we will respond to those. But this tool is available for download and we will provide the link.
Very good, mate. I think that is a great... I wouldn't even say it's just an introduction. There's more to it than that. I think it's simple, and people need to not get bamboozled by some of the jargon and worried about how difficult it may be, because I think you've just demonstrated it and how simple it needs to be.
Yeah, I hope so. Like we've said, it's something that we use for our clients and have shared with our clients for them to use in their businesses. And in some cases, we do it on a regular basis for them. So it's proved very worthwhile. And the clients that we prepare it for them it's provided some insight to some really important decision making. Really, really important decision making. So it's definitely proved its weight in terms of putting the data together.
Good man.